All right, we're gonna go ahead and get started. So we're gonna go over the trading journal. And this you're gonna fill out before every single trade. Keep in mind, all of us trade different. So you are gonna fill this out, but remember, yours might be different than someone else's. You might be trading different time frames than other people. But this is just going to basically be where you are gonna be documenting your trades. So it's not so much your trading plan, it's your trading journal. So your trading plan and trading journal will be a little bit different. So what I mean by that is the trading journal will document the actual trade, right? But your trading plan will be different than everyone else. You know, some people will only trade London session. Some people will only trade US session. Some people will, only trade 1 hour a day. So your trading journal should be, on every trade, but your trading plan will be different than everyone's. That's something that you need to, maybe after the class, just sit down by yourself and just kind of, write it out. Maybe, you're going to obviously have to schedule it around your job. But for me, like my trading journal and trading plan would be, trading plan should be, I'm going to wake up an hour before US session. I'm going to take a shower. I just plan my whole thing. Like my whole trading plan is basically, involved with the life around it as well. It's not just specifically for your trades. Trading journal is specifically for your trades. Your trading plan, like I said, wake up, eat a good breakfast, maybe have your coffee, hop on 30 minutes prior to US session, scan and analyze the markets for 30 minutes, and then whatever setup you like the best out of your, say, 5 pairs you've analyzed, you are waiting for your entry during US session, and then you have to fill out your trading journal. So the trading journal should be a part of your trading plan. So you'll fill this out, and then however you want to manage your trade, you do that and be done. So don't get too confused. You should definitely be doing both of them. But for this class, I can't really help you with a trading plan. Like I said, that's something you're going to need to just brainstorm, come up with yourself. But as far as the trading journal, how this works is you're going to put your account balance here, right? Where it says account balance, and then your open total risk. So this will be, say, if you don't have any trades open, well, then your open total risk is 0. If you have, 2 trades open at 2% risk each, then obviously your open total risk is 4%. I would say keep it under, 5-6% total open risk. So, if you already have 4% open, well, then your trading position, you might, only be able to risk 1%. Keep in mind, if your trade is open and it's risk-free, well, then you don't have, total open risk. If one trades, you're risking 2% and stop loss is at break even, and then you have a 2% risk trade that is, in and out of profit, it's not at break even, your total open risk should be 2% then. Okay, and then your account equity, you'll be able to get that off of your MT4, which will be your account balance plus or minus your open positions. Okay, so just fill that out, and then put your date, the time you analyzed it, and then you'll come back, and when you actually enter the trade, then you're going to put the time entered. So you could, analyze it at 7:30 a.m. and then enter at 9:30 a.m. So you would come back and fill that out. Obviously the pair, and then your directional bias. Is it bullish? Is it bearish? And is it ranging, right? How we get our directional bias? Number 1, we can go look at the seasonality. And number 2, we go look at the chart's price action. The seasonality, which was last night's lesson, if it's bearish in June, and then we go look at the price action and it's bearish, well, then obviously we're looking for sells and it's a bearish market. Then the institutional pattern, was it a bullish sniper, a bearish sniper, a bullish kill shot, or a bearish kill shot? Go ahead and circle that or highlight with that one. And the time frame of the setup, was it on the 1 hour, the 2 hour, the 3 hour, the 4 hour, the daily, or other? Okay, remember, even if we're entering on the 5-minute time frame, it should still be a higher time frame setup. Remember, we're looking at that higher time frame setup, and then when price actually gets there, then we are entering on the lower time frame. But it's still our bias is all the higher time frame. Was liquidity grabbed? Yes or no? They should always have grabbed liquidity, right? Imbalance? Yes or no? That's our confirmation. Divergence? Yes or no? Is there a major fib level? So you can see all of these are just confirmations now, right? Majority of traders, remember, we can go to myfxbook.com, go to the community tab, click Outlook, and then you'll get the directional bias of majority of the traders. And then any other additional, confirmations or confluence. So, maybe you use some indicator you like to use, maybe use MACD, moving averages, whatever other confirmations you have, you can put there. And then did we enter on a lower time frame? So after all of this, did we enter on the 5 minute or the lower time frame? Yes or no? Or did we just stick with the higher time frame? Then you're going to want to identify the next buy side liquidity. So if we were looking at a chart, if we were entering here, our next buy side liquidity would be the next equal highs, which would be up here. So we would mark this level here as our next buy side liquidity. So we would say, 107.4 or whatever is our next buy side liquidity. The next sell side liquidity, say these were equal lows, we would mark the next sell side liquidity and go ahead and fill that out. Okay. Remember, like I said, at the beginning of the call, just to verify and have it on the recording, the first one is buy side liquidity. The second one, this should say sell side liquidity. I have to fix it. Okay. The reason we're marking these levels, that should be our take profit, right? So if we're in our trade here, our take profits should be at that next buy and sell side liquidity areas. Okay, your trade position, how much are you risking? 1%, 2%, 3%, 4%, 5%, or other. I do have, multiple accounts. I usually risk about 5% per trade on my main account. And on my bigger account, sometimes I'll just risk 50, 60% and not really care. If it blows it, it blows it. So always have multiple accounts for whatever you want to do. And then your risk to reward ratio. 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5. If you have those nice 1 to 20s, on the lower time frame setup, then go ahead and just add it there. Okay, and then your entry price. So after you do your full analysis, you need to put your entry price here, then your stop loss, and then 3 take profits. Okay, and then the little box here. Once this trade is completed, come back here and then check. Did it hit the stop loss? Or did it hit take profit 1, take profit 2, take profit 3? Okay, so what this is going to help you do, if you start losing trades, you want to start comparing all of your trades. So you'll go through your trading journal. Maybe you notice that, damn, every time I lose, it's a bearish kill shot, right? Because maybe you're winning on all the snipers, but for whatever reason, a majority of your losses were the bearish kill shot. Maybe a majority of your losses, there was no imbalance there. And then maybe all of the trades you won, maybe they were all lined up with a 70%. They all had imbalance. They all had divergence. So you can start comparing, your wins to your losses and finding out what you should stick to. Maybe there's nothing you can really correct, but maybe you just have better sight and better, vision in the market when you're trading just snipers. So if that's your strength, you should maybe focus on just snipers. Maybe so specifically where it's just snipers on the 4 hour with imbalance, with divergence. You see what I'm saying? Just, you want to find what you're strong at and stick to that. And that's what you're going to be able to use this for. And you should be doing every single trade. You should fill this out for every single trade. Okay. So let's go ahead and do a full analysis. I'm not going to type it because it's just a screenshot, but what I'm going to basically just break down AU like we would have had if we were taking, let's say this cell here. Okay. So let's just do replay tool here. All right. So let's say we saw this trade here. So we would go to here. Let's say we had a $5,000 account. We put that there. We have 0 open risk. Maybe it's our first trade on the $5,000 account. Can I provide more clarity on major fib? Yeah, we'll do that right now. And then your account equity would be 0 because we have no trades open, right? So 5,000, 0, 0. So I would do the drawing on it, but then it's gonna be on both screens. All right, date analyzed, we would just put today. Time analyzed, it is 10:11 p.m. here. We wouldn't fill this out because we haven't entered it yet, right? We're just doing our analysis. Our pair was odd USD. Directional bias, remember we looked at seasonality last night. AUD USD was bearish. And then let's look at the price action. Pretty bearish overall, right? Okay, so we would circle bearish. Bearish here. Institutional pattern that we see a bullish kill shot. Down move, bullish move up to the highs, price trades under it. That's our bullish kill shot. Remember, we can go 50%. And this is not the fibs I'm talking about. So don't pay attention to that yet. We'll go through that. We're just identifying our institutional candle there. Okay, so we would then highlight it is a bullish kill shot. All right. Time frame, we are on the 1 hour. So we would circle 1 hour, highlight 1 hour. Was liquidity grabbed? Yes, we have these highs right here. So this high here, this high here. Liquidity grabbed here. So we would circle yes. Yes, liquidity was grabbed. Is there imbalance? Yes, there is. It's kind of hard to see, but it's this gap in price here. Wick on the left, wick on the right. This is the imbalance right there. So if you want me to highlight it, that's the imbalance, okay? Let's go ahead and mark this. That's our imbalance. Okay, so yes, there's imbalance. Is there divergence? So this is hard to see. It didn't highlight it, but if we go look at this, so from right here, so basically this candle is right here. So we're gonna mark it, price is pointing up, right? Okay, that same candle, we're gonna go down. So it's right here on the RSI, is pointing down. So that is divergence. It didn't highlight it. That's why you have to always verify yourself. Don't rely on the indicator. But yes, there is divergence. Yes, okay. Major fib level. So what I mean by that is how you draw fibs is going to be from swing high to swing low if you're looking for a sell. So we would go from this last high here to where price closed at the low. And major fib levels, I mean 50, 61, 70, and 80, okay? So I love the 70, 80%. This is my major fib zone that I love to trade. You can see that's why they're green. My 50 and 61.8, they are just basic. They're major levels, but they are basic numbers or basic retracements. The 70 and 80%, that's the prime deep retracement zone that I love to trade. So I'm gonna go ahead and highlight that. Oops, that's discord. And so I would say, I would probably circle both of these, 70 and 80% zone, okay? Let me minus this out real quick. All right, go back to the chart. Majority of traders long or short. I think at the time of this trade, majority were short, okay? So you would go majority of traders are short. Is there any other confluence? Okay, so this is where you can do your own stuff. You know, previous day high and low. So maybe we would say there's no previous day high, but if this blue line here, if this lined up inside or at the kill shot, then we would say, okay, an extra confirmation is that the kill shot is at the daily high. Okay, let's do some EMAs. All right, EMAs are here. Is there any EMAs here? No, there's no confirmation of EMAs there. So no really other confirmations or confluence that we need to worry about. So let's hide all that. Let's hide our indicator here and go back to this. Okay, so additional, no. Lower time frame entry, we don't know yet. We're not circling that. So the next buy side liquidity level would be above these highs. Okay, so we would just, mark 69770. The next liquidity for the sells would probably be these three equal lows here. We'll just do 679 or 6795. Okay, now our trade position, since everything's lining up, we have bearish on price action, bearish on the seasonality. We have an institutional candle. It's on the 1 hour. Liquidity was grabbed. Imbalance, yes. Everything's yes, 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 yes. There's major fib levels. Everything's looking good. So this is a very, very strong trade. So maybe instead of just 1%, we're going to go ahead and risk 4%. Okay, our risk to reward ratio. Short position. Let's just save this one. Stop loss above the high. And that's why I have that 110% fib. That's my stop loss usually. Okay, so this trade is about a 1 to 3. We'll just call it 1 to 3, okay? Or if we're just going to enter at the 50%, now we have 1 to 6. So it's really just going to depend on what you're risking. So maybe right here we just go 1 to 6. Entry price. Okay, so let's go ahead and let's just say we're going to enter at the 50%. We're going to round this to 69550. And then we're going to do, let's just do 150 pips, risking 30 pips. Okay, we make it simple. So I'm going to delete these now. You can keep them marked up, but I'm just deleting that so we don't get confused. Okay, so this is what our trade would look like. We're going to go ahead and delete this fibs too. Once you have everything identified, so this is our 78, 80%. This is our imbalance. And then we're going to go back here and the 50% we're going to keep highlighted. I didn't mean to delete that one. Okay, so the 50% is right here. Let's go ahead and round that as well. All right. So you can see our entry is right below the 50%. It's right at the 70% fib. There's imbalance, and this is our institutional candle here. So everything's analyzed. Everything is looking good. We filled out all of our info. Now we would just wait. Okay. And we would wait. And then you can see that wick right there would have been our entry. You see how it's right there? So it wicked the 50%, and it also wicked just below that, which is our actual trade entry. Okay. And then we would just manage our trade. Okay. So you can see how everything played out perfectly. Our analysis was perfect. I don't think this would have hit take profit yet in real time. No. So take profit's not hit, but price dropped definitely 30 pips. After 30 pips, I would make it risk free. So, price dropped 120 pips. So definitely should have our trade at a minimum risk free. So this is what we would currently be looking at. Is there any questions on that? The major fib, Winston, was just from the swing high here to the swing low. And you can see the 70% perfectly right here. So see how it wicked it? Look at all the confirmations we had. Imbalance, 70% fib, 50% of the kill shot, everything lining up right there. Perfect sell entry. If there's any questions on that, let me know, but should be basically step by step, very easy to go through. And you can print it out, or you can just save it and you can edit it on your computer each time. Whatever you'd rather do. I think if you want to take it serious, if you're going to take it serious, you know, maybe go to Walmart, get a binder, and then print out a bunch of them and just document every single trade, and then have all of them to look through. And you can, you know, on the weekends you can back test and look through, you know, what was good, what wasn't. There were so there was not 2 retests. Remember, this retest doesn't count. It doesn't count until price closes below the institutional candle. So anything prior to this candle does not count. This does not count. It's prior to price closing below. Price closes below here. This is the first retest. Screenshot this. Okay. Yes. Remember, the sniper, it has to go bullish engulfing. So it's not valid until price closes above. And then the first retest. Remember, for the sniper, it's bullish or bearish engulfing immediately after grabbing the liquidity. So, you know, it has to be closed after it, or it's not a sniper. Okay, perfect. Anyone else? Any questions? In 30 minutes or 40, what is it, 37 minutes, we have our other call. But if there's any questions, let me know so I can cover them for y'all before that call. And tonight I'll be, or probably tomorrow. So I have no plans tomorrow. I will start going through anything in the Discord. Okay, so it's only day 6. Okay, hold on, let's see. All right, so it's probably because I didn't have service when I tried to upload them. I will put the rest of the days in the Dropbox after this call. Okay, let's see. All right, the lower time frame entry. All right, if I have time after these questions, I'll do that. If not, we'll do a full lesson on it tomorrow. I know I said that last night, but I needed to get the trading plan taken care of. I also have a video on the lower time frames. If you want me to, I'll just post that in the uploads as well, because I did like a full breakdown of it with a bunch of examples. I'll try to upload that as well tonight, but we'll do a full lesson just for y'all on that tomorrow as well. Okay, let's see. Lower time frame, 6 days. Could you explain one more time? Because that looks like a sniper entry to me. What tells you to kill shot? Okay, I think you're talking about the AU trade. All right, so a sniper would be if this was bearish engulfing. This was no bearish engulfing. So this bullish move down, bearish move down, bullish engulfing, that's a sniper. Look at the difference. This is a down move, bullish move up, and then it took 1, 2, 3, 4 candles to close under it. So the reason this is a sniper, a kill shot, sorry. Do you see how this is a resistance level? Here's a high. This would be a sell-off. So this is retail traders selling this resistance, okay? Remember, resistance is not a perfect line. You know, it's a zone. So let's just say we have this zone here, right? We have price action here, resistance, goes up, breaks resistance, support, breaks it, becomes resistance, and resistance here. Okay, resistance. Retail traders are selling. Retail traders selling here. If they're selling, they're going to have those stop losses above this high, right? Above that resistance. So let's just say that's the stop losses above the resistance, and they're going to have the buy stops for the breakout. So if stop losses hit, this is going to continue bullish, okay? But retail traders are selling. So retail traders are selling. That means the institutions are buying, right? So retail traders selling. They can see that bearish candle. Next candle looking really good for sales, right? We got a bearish candle to close off the resistance. Sales are looking good. Now everyone's selling has been stopped out at break even or stop loss hit, and then buy stops are hit. If buy stops are hit, that means right here, buy stops are hit, so retail traders are buying. That means the institutions are selling, okay? Now the institutions are selling, okay? Once this closes below, we know this is now a kill shot. We know on a kill shot, usually they're gonna go to anywhere between the open, which is here, and the 50%. So they could come up right to 50%. Because remember, they have to mitigate out these longs because they were buying into the down candle, right? They're picking up the buy side because retail traders are selling. But now the retail traders are stopped out of shorts. They are in longs. So they need to come back out and mitigate out these longs. Once they mitigate out those longs, they are just holding those priced in shorts up here where the buy stops are hit. So we would just wait for them to come back and mitigate. When they are mitigating, we are taking the entry. That's when we know to sell. So we would have waited, and then we would be selling here when they're mitigating those longs. That's why they trade into the candle, right? Because they have to mitigate. But yes, this is definitely a kill shot. This is more of a stop hunt compared to, down move bullish and gold. Does that make sense? If this was a bullish move up, bearish engulfing, then yes, it would be a sniper. But it's not. Remember, it doesn't really matter whether it's a sniper or kill shot. It just matters that they grab liquidity and reverse. Once they've reversed after grabbing liquidity, that's when we know what candle it is, what our entry should be. Because if this never closes below here, we never enter the trade. We only enter the trade because we see the pattern they gave us. Okay, for the seasonality, do they have UJ and GJ? No, so they have UJ, I think, but they do not have GJ. What you would do is look at the seasonality for GBP and for JPY and kind of compare them to each other. Because they're basically showing you one currency. The only reason a lot of them are compared to USD is because USD is the base currency for, majority of everything. But you can compare the two for sure. And I don't think, did anyone post the login access to the website, Equity Clock? Let me see. Okay, yeah, it's right here. All right, so let me copy this. Remember, y'all should all have access to equityclock.com. Equityclock.com. This is the login, so you don't have to pay for it. And then this is the PDF you can save. And I want y'all to start documenting that. So what you can do for tonight's homework, if y'all want to do it now before the next call, go to your 3 pairs and then just kind of, it doesn't have to be a new setup. If you see a new setup, great, fill it out. But if you see an old setup, I want you to go back and fill out the info on it. Yes, it's a bullish kill shot because the bullish liquidity was grabbed. Perfect. Yep, you're right. Bullish killed the, like, basically I say kill shot because they killed the buyers. They grabbed the buy side liquidity. And a bearish sniper, a bearish candle grabbed liquidity. Let me know if you have any more questions. I got the chat open. If you have a question, you are going to get your answer. Grabbing a buy side. Yep. So bullish is grabbing the buyers. And it's also, you can see the institutional candle will be bullish. And then the institutional candle here is, you know, if it was grabbing bearish liquidity. But yeah, we'll do, okay, hold on. How far back is the valid equal highs, equal lows? So you're saying like how far back to go look at, you know, areas of liquidity, like major highs and lows? I would just look, so like if I was looking at this chart here, remember I told y'all, we don't really want to look at this. You know, do you see equal lows down there? Yes. But if there was liquidity under these lows, right, that means they have almost 700 pip drawdown. That's not realistic. What you should look for is zoom in, and I would look at maybe like this. And we could see that, you know, liquidity was grabbed above these highs already. Let's delete all this. So liquidity was grabbed above these highs here. And then we can just kind of look right here. The only thing I really see is these lows. So liquidity was grabbed under these lows and these highs. So I would look for new setups. So below this liquidity, below, yeah, this liquidity grab, we have these equal highs, which was grabbed here. So I would look for the next lows between that, which maybe, you know, some gets found, but I wouldn't really go too far back. Because like right here, right, I mean, you could look like here and here, but you can see like these equal lows here, this down spike grabbed liquidity. So I would keep everything more in real time. You know, something, you know, like this. So what is this? Let's see. Maybe 15 days, so a week or two, maybe 2 weeks max. You look at the 4 hour. So on the 4 hour, you know, you can go back a little bit further, but I would identify like this maybe, but we don't want to really say, okay, we're going to buy or sell because of whatever was based on May 14th. Could that be a potential take profit level? Yeah, maybe, but we're worried about this up here. If a sell-off happens here and it just goes down and keeps going, okay, you know, yeah, we'll target these lows or these lows, but keep everything real time. So like on the trading journal, there's 3 take profits, right? So maybe you go take profit 3, take profit 2, and take profit 1, right? 1, 2, 3. That way, if you do end up swing trading it, you know to target down there. Let's go ahead and get out this. Okay, so what I mean by a continuation would be once we have our setup entry, so like this cell here, if there was a new setup created for, you know, and because we're bearish, right? So we're looking for bearish continuation trades. So our seasonality was showing sells, our price action is showing sells, our first entry is a sell, and then we see a new setup for a new sell for a continuation down. That's what I mean by that. Does that make sense? You're just looking for the price for setups to continue with the trend. So that's what I mean by continuation trades. Y'all remember the same thing with the you know, the market structure we were looking at, right? From day one, we have a bullish trend, and then we have consolidation. remember we were looking for trend continuation trades. So bullish trend, we're looking for the trend to continue, but first we want to see, that setup, grab liquidity. And then this would be a bullish continuation trade, right? Price closes up, we would enter the sells on the retest and look for the continuation of this bullish trend up. What about timing? When would be the best time to trade? So that's going to be up to you. And because I don't know what goes on in your life. If you work, regular 9 to 5 at 8 a.m., well, then maybe you can't trade US session because you're at work. So you need to trade London session. So it's really just going to depend on you. I personally, I go back and forth. Sometimes I get into routine where I stay up all night till 4 a.m. and sleep all day. Not all day, but it's like 12 or 1. So obviously that's sleeping through US session. So I'll trade London session. And then sometimes I get tired and my body's, tired of sleeping all day and staying up all night. So then I'll get back into routine where I'll go to bed at 11 p.m. after the webinar or 12 a.m. right after the webinar. And then I will wake up early and trade US session. So it really just kind of depends. I fluctuate. I like the price action during New York session better or US session better. But London session is still volatile too. I don't trade anything between that. No, I only trade, I'll be on like an hour max. So I'll wake up maybe, if I'm going to trade US session, which it's not really good. So it opens at what, like 7 a.m. But the New York Open, because that's all pre-market stuff. The actual volatility for at my time zone, Central Time, is 8:30 a.m. CST. So that's when the market really starts to kick into gear. So I would, let's say we get up at 7, take our shower, eat our breakfast, and then we're getting on the charts at 8 a.m. We're analyzing for 30 minutes, starting from 8 a.m. to 8:30. At 8:30, that's when we start looking for our entry. If there's no setup, there's no setup. If price, we might have a full analysis, but price isn't close to our entry. So we scan a few pairs, there's no entry. All right, close the computer, be done with it until the next day. If there is an entry, then I would get in the trade, maybe monitor for 30 minutes. Because remember, we're entering off the 5-minute if we're trading real time. So you'll be able to tell within 30 minutes or an hour that, that trade's going to be good or not. Make it risk-free after 30 pips and just let it ride out through the day. After that, I literally close my computer and I don't even look at the charts until like Asia session. I'll go check on my trade. I just let it play out. If it wins or loses, it doesn't affect me. So I would say hour and a half max. You should not be on the charts all day. Can you take a quick look at Euro NZD for a valid breaker block on a 30-minute to clarify liquidity graph? Okay. All right, Euro NZD, I don't like that pair, but let's go look. All right, Euro NZD is here. 30-minute is, and this is the reason I don't like this pair. Look at all of this range. So I can just see on the 1 hour what you're talking about. There's liquidity grabbed under these lows. Liquidity is grabbed here. And then there's equal highs here, okay? It's gonna whipsaw back and forth in here, just like this. If you were looking at this is why you don't wanna mess with this pair. Look, 3 equal highs there, 3 equal lows there. So what are you really gonna do? You could say, oh, I'm gonna try to sell off of this bullish candle, right? And then target these equal lows. But what happens is, waiting, okay, here's your entry. right? Looks good. Pushing up, pushing down, okay? So this trade would have played out, but you see how ugly that is? So you would have sold here, your stop loss would be above this high. You would have had some drawdown and then you're targeting these equal lows. So that's what you should look for, but risk to reward's not very good. So once the lows are taken out, you see now they've grabbed liquidity here. So you see how they're going to liquidity, right? Okay. So we would be looking for longs here, right? Because this is the equal lows, down, move through the lows, bullish engulfing, that's our sniper. You would be buying the retest, but it's kind of just ranging there. You see how there's nothing really clean. And then ends up just falling through that one. So this like would have been the retest. See how there's no imbalance there? This is essentially the retest. And it didn't play out very long. But just showing you some examples of how it just ranges a lot on this pair. So it's not very clean. But on the 30-minute, this is a grab of liquidity, but there's no setup. So just because it grabbed liquidity, like this wick did under these equal lows, it didn't really create a setup that we can trade. It just grabbed liquidity and ranged. So I would highly recommend staying away from that pair. But yes, that is a grab of liquidity. If we saw big bullish engulfing here, we would sell we would buy on the retest, take the trade up. But we don't have an institutional candle. But do you see how choppy this is? All right, just no other questions real quick. I'm gonna close this one. I'm gonna try to figure out why the other ones aren't uploaded so I can have all the videos in there, and then I'm gonna start the next webinar. So let me know if y'all have anything. I'll answer it real quick. Okay, imbalance is going to be a gap in price, basically like a Sunday gap. Now you don't use this to specifically enter a trade, it's an extra confirmation, but what we mean by that is wick on the left to wick on the right. This gap in price is imbalance, okay? Right here, wick on the left to wick on the right, that gap, you can see price trades down. So, you know, now it would be just this gap and then eventually it gets filled in. So there's no imbalance anymore. This imbalance has not been filled. So, you know, that's still valid. Imbalance would be this, wick on the left, wick on the right, a little bitty gap there. And then there's one here too, wick on the left, wick on the right, right? And you see how both those get filled by that wick. Should be a recording on it, but it's literally just an extra confirmation. It's just a little gap. Basically like a Sunday gap. All right, I'm gonna upload this right now and figure out the other ones. I'll let y'all know once they are all uploaded. But remember, 15 minutes, we have that other call.